Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schiller here in studio at the New York Stock Exchange. Well, the S&P 500 is coming off of a record close after the first batch of this week's jobs data arrived during Tuesday's session. The Job Openings and Labor Turnover Survey, better known as the JOLTS report, revealed that job openings were higher in October compared to September at 7.74 million. Well, there's plenty more on tap over this next hour here on NYSE TV Live, and so let's take a look what we'll be covering. While job openings were in focus yesterday, private payrolls for the private sector will headline much of today's activity. Gregory Dacco, chief economist at EY, is going to help crunch the numbers and provide insight into what could be in store when that November jobs report comes out on Friday. Even though Black Friday and Cyber Monday are in the rear-view mirror, there are still plenty of ways to score holiday deals. The senior editor of the Crazy Coupon Lady tells Trinity Chavez some of the best ways to save while shopping. And we are just one day away from the 101st NYSE annual Christmas tree lighting. You don't want to miss everything that we have in store here at the exchange for Thursday's big event. All right, well, let's turn back to our main story, and that is the jobs market. Less than an hour ago, ADP released the latest information on private sector employment during the month of November. Employment in the private sector grew by 146,000 in November. That was a little bit lower than the 163,000 jobs that were expected, according to economists. Education and healthcare services led the way with 50,000 positions added, and October's figure was downwardly revised from 233,000 to 184,000. We're going to talk more about the jobs report with my first guest here, but of course, all of this setting up as well as some positive results from Salesforce, an NYSE-listed company, and positive outlook on the back of AI, setting up for a fractionally higher open here at the stock exchange today. All right, joining me now with more on the jobs market, as we are keenly focused on that this week, as is the Fed, is EY chief economist Gregory Dacco. Gregory, it's great to have you on the show this morning. And what do you make of these private payroll numbers?
Well, I think they do signal strength in the underlying labor market. We are in an environment where there is this gentle deceleration in job growth. Of course, last month in the payroll survey, we saw a massive hit from 2 hurricanes and a couple of strikes that reduced job growth to only 12,000 jobs over the month of October. We're expecting a bit of a rebound when it comes to the November data. We wouldn't be surprised if payrolls came in above 200,000 for the month of November, with a strong rebound in the manufacturing sector that was restrained by the strikes, and in the leisure and hospitality, as well as in the professional and business services, both of which were restrained by the hurricane's disruptions.
Of course, the ADP number does give us a sense of the private sector, but a lot of eyes do focus on that non-farm payrolls report that does come on the first Friday of every month. And consensus is that 214,000 jobs were added in the month of November. That does include government jobs as well. Is that your forecast too?
Yeah, the consensus is pretty close to our estimate. We're estimating that job growth was around 215,000, so right on the spot relative to consensus, with the private sector adding about 175,000 jobs and the government sector adding another strong month of 40,000 jobs. I think we're going to see some rebound in the goods sector of the economy, with manufacturing benefiting from the end of a couple of strikes. Construction spending, construction employment still remaining quite strong. And on the services side, we're likely to see some strong momentum in the healthcare, leisure, professional and business services, but perhaps a risk of a bit of a cool down in the retail space as well as in the transportation space, because we've heard that the staffing plans are relatively subdued on the retail front.
Well, you mentioned earlier just 12,000 jobs added in October, and that was due to those extreme weather events like the 2 hurricanes and the Boeing strike. Do you expect that those jobs will be reabsorbed into the data that we get on Friday?
Yeah, typically what we get when we have these types of one-time disruptions, one-off disruptions to economic data, is that we see a hit in the initial month and then a rebound in the subsequent month. So I think we have to be a little bit careful when we look at the underlying data for this jobs report, not to take too much or to put too much emphasis on strong growth in manufacturing, in leisure and hospitality, in professional and business services, because those are going to factor in some of the weakness of the prior month that is offset with strength in the month of November. So it's likely going to be important to average both October and November when it comes to the data.
We've seen Americans spend a record amount of money shopping online, both during Black Friday and Cyber Monday this year, according to the data. Does that equate to more jobs in the retail sector, and how does it impact inflation?
Well, we have a fairly moderate retail season. Consumers are still spending, but they're being judicious as to how they spend. We're anticipating holiday retail sales to rise about 3.5% this year versus last year. But as I mentioned, retailers are being also cautious with who they hire and at what wages they hire. And that's likely to lead to a bit more subdued retail sector hiring and employment over the holiday season. It's not terrible, but it is an environment where there is more caution when it comes to hiring just the right amount of individuals to be able to navigate this period of still high prices, high costs, and high interest rates.
You know, we talk so much about the headline number on the non-farm payrolls report that we get on Friday, but of course, average hourly earnings are part of it as well. And according to the data, we expect, at least the consensus, that those numbers might have slowed a little bit in November. What does that say about the health of the labor market?
Well, generally speaking, we're likely to see wage growth rise about 0.3% month over month. That comes on the back of a 0.4% increase in October. But we're likely to see wage growth momentum decelerate from above 4% to about 3.9%. It's still rather hot, but what we are seeing is a combination of wage growth deceleration along with strong productivity growth. And that is very important because that strong productivity growth offsets part of the cost of these higher wages and allows businesses to not necessarily have to pass on these higher wages into consumer prices. And that is all disinflationary, which is still very positive for the U.S. economy.
Interesting, Gregory. So we do have a Fed decision, the final one of this year, mid-December. Do you anticipate that we do get another 0.25 percentage point rate cut from the central bank?
I think it's likely that we'll get a rate cut in December. We are in an environment, as I just mentioned, that is still disinflationary. If you look at the broad inflationary dynamics, we're still moving closer to that 2% Fed target for inflation. And we are seeing, as we were talking about, a slight deceleration in labor market momentum. Nothing dramatic. The labor market remains still robust with an unemployment rate around 4%, but we are seeing gradually slower employment growth and consumers that are being more judicious with their outlays. So I think policymakers will want to recalibrate monetary policy a little bit more and then take a bit more time in 2025 with a likely rate cut at every other meeting. So 100 basis points of rate cuts expected in 2025.
EY Chief Economist Gregory Daco. Gregory, always good to see you. Thank you so much for joining.
Always a pleasure.
All right, well, coming up, shoppers can take advantage of plenty of savings even after that early holiday rush. Stay with us for more details.
So now, Eric, this year, GIC is celebrating 40 years in the United States. What has this journey looked like for you?
We are so proud to be celebrating our 40th year in the US. In 1984, we opened up a small fixed income trading shop here. And the idea was we were a global investor, but we wanted to be local. And we thought it was really important to meet your partners in the market, get to understand the trends, and be there with the businesses that you're invested in. So we opened up our first office in what we thought was the most important market, the United States. We opened up an office 2 years later in San Francisco. And amazingly now, even 40 years later, we've got 11 offices around the world, and these are still combined our two biggest offices in the world. Along the way, we've also diversified what we do. So I mentioned we started with fixed income investing, but now all of our asset classes are invested here. So public markets like fixed income, public equities, our hedge funds business, but also our private markets, our private equity team, our infrastructure team, our real estate team. And the US has continued to grow in importance as a part of the portfolio, So it's now almost 40% of the overall exposure.
Now, Eric, tell me, what opportunities are you seeing in today's market?
Well, we always say prepare, don't predict. We do believe as investors and long-term investors that you want to be diversified. So if you look at our portfolio, it's globally diversified. It's also diversified across asset classes. But we do like to look for long secular themes. And so two that we are interested in are digitization. So we've seen a long tailwind on technology, and in particular in the US, which has been a real market leader for the last 20 years. We believe AI is a really revolutionary technology, and we're investing in that space in a series of ways. A second would also be decarbonization. We do think the planet is getting warmer, and so there will be significant capital invested against mitigating that. And so over the next decade or two, we do think this is a huge opportunity for firms like GIC that are really focused on investing in these long-term projects, providing long-term solutions.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schiller here in studio at the Stock Exchange. We've covered the beginning of what has been an unprecedented holiday shopping season in terms of demand and dollars. Yesterday, Adobe Analytics confirmed that consumers spent $13.3 billion on Cyber Monday. That's a 7.3% gain from the year before. Comes days after Adobe disclosed that consumers spent nearly $11 billion online for Black Friday. Well, if you missed out on the deals the past week, not to worry. My colleague Trinity Chavez has more on how to find the perfect gifts without breaking the bank. Trinity, good morning.
Good morning, Kristen. That's right. So as the holiday shopping season really heats up, many of us are scrambling to find that perfect gift, especially if we missed out on Black Friday and Cyber Monday deals. But don't worry, there's still time to score big savings. And joining us now to talk more about it is senior editor of The Crazy Coupon Lady, Kristen McGrath, here to share her insider tips on how to find the best deals to maximize your budget. Good morning.
Hey, good morning.
Hi, Kristen. Thank you so much for joining us today. So let's just get right into this conversation because, you know, like myself, many people missed out on Black Friday and Cyber Monday deals. So what would you say are the top strategies to still find great holiday gifts and deals?
Yeah, the good news is you still got two sweet spots. Right now, retailers are extending their Cyber Monday sales, so you still have plenty of opportunities to shop this week. And then you're going to hit those last-minute clearance sales at the very end. So you got some second chances.
And are there specific stores or online retailers known for offering big discounts in the weeks leading up to the holidays?
The big one is going to be Target. This weekend is going to offer its big gift card sale where you can get 10% off gift cards. You have to be a Target Circle member, but it's free to sign up for. So you're essentially giving yourself a 10% discount at Target if you are hoarding those gift cards for yourself. We're also seeing some items that are still at their Black Friday prices that are hanging in there. Target still got the PS5 at its Black Friday price and the Ninja Creamy at the Black Friday price with a $20 gift card on top of it. And Walmart still has the Barbie Dream House for its Black Friday price when you apply the special Walmart rewards offer of $25.
But what would you say is the best way to take advantage of last-minute sales without overspending or getting caught in that holiday rush that we all dread?
When it's the last minute, you've got to be flexible, but you've also got to have a plan. So have your top gifts that you want, have some backup options so that you're not scrambling. Because at the last minute, selection can be a little thin. So have an option, have a backup option so that when you see something on sale, whether it's a toy or a holiday beauty set, you can grab it and you can save.
Now, Kristen, I'm interested to know about your perspective on some unique gifts and the best discounts this time of year as you cover this sector all the time.
Yeah, as far as unique gifts go, restaurants are offering some really good gift card deals right now where, you don't have to give someone a physical object. You can give them the experience of dining out at a restaurant. The last couple of weeks before Christmas, you can get bonus gift cards and gift card discounts at restaurants. And promo codes. Promo codes are your best friend this time of year. For example, we're seeing Hey Dude, the shoe company, offer 40% off for Cyber Monday still, and it's past Cyber Monday. So look for those promo codes, look for those gift card opportunities.
Now, would you say that there are specific categories like electronics or retail or toys even that are offering better discounts than others?
When it comes to the last minute, which we are definitely getting into, it's going to be those seasonal items that the retailers want out that are going to see the best discounts. So think toys, think holiday gifting sets. But still, you're also going to see some giftable items like small countertop appliances, fitness watches, things that aren't necessarily seasonal that retailers are going to try to entice you with in these next couple of weeks.
Now, for budget-conscious gift givers, what would you say are your top tips for creating a thoughtful but affordable present?
Right, so always remember that it is the thought that counts, and there are plenty of ways to save. Go in with a list of what you want, but again, be flexible, especially if you want to take advantage of those last minute deals. And my biggest piece of advice is always compare across retailers. If you see something you like, go check other retailers. They might be offering a promo code, a coupon, a gift card with purchase that could make that deal a little better. And you'll be glad that you spent that couple minutes checking.
And I do want to ask you about loyalty programs like cashback applications and digital coupons. We talked a little bit about it more, but dive in a little bit deeper here, how consumers can really utilize these platforms to get the most bang for their buck this holiday season.
If there are retailers you plan on shopping with, make sure that you are part of their rewards program. Most of them are free to join. That's going to unlock a lot of extra offers, whether it's Target Circle or Kohl's Rewards. There's also a lot of great cash back apps out there like Ibotta, where you can check the app and see what's going to give you extra cash back for the holidays and stuff that you would be buying anyway.
And I do want to point out that it's, I know that we're in time crunch right now because it is, Christmas is just right around the corner and other holidays as well. But right after the holiday season, you can score some major deals also.
Yeah, after Christmas sales are legit. So if you're wanting to do a little self-gifting, or maybe you're celebrating a little late with family or trying to pick up some necessities, those are definitely smart to hit up. And one thing to note is that sometimes after Christmas starts a little earlier than you would think. So those last minute sales kind of merge together with those after Christmas sales. So start thinking right before Christmas and be ready to continue shopping in the couple days after as well.
I know my mom always says the best time to buy her Christmas decorations is the day after Christmas for next year, right? Well, thank you so
Mom's smart.
Thank you so much, Kristen McGrath. She is the senior editor for Crazy Coupon Lady. Now, coming up, we're going to dive into the world of personal finance. An industry expert tells us how the best position is on your portfolio for the new year. Stay tuned.
Fiserv serves fundamentally every American household, largest payment processor and largest fintech in the world.
I do want to talk about Fiserv's third quarter report. It was showing significant growth, and especially when it comes to merchant solutions. Can you talk to me about what you think is fueling this growth and how you expect to continue that momentum?
We had 28% revenue growth in Clover. Our regions outside the U.S. also are growing very, very strong. Our commitment to small business, our commitment to innovation, along with our e-commerce capabilities. So, being able to serve every household across the U.S. and then in multiple countries has given us great geographic diversity and given us great capability from the largest retailers to the smallest pizzeria.
And you actually just recently announced your collaboration, your partnership rather, with DoorDash on the Crimson program. Can you talk to us more about that and why this is such a significant milestone for Fiserv?
So what we did was create a solution set for DoorDash that allows them to be able to bring a better experience to their drivers, the Dashers. And it's really an integrated approach. It's using a series of products we have. We brought a couple of partners in, both in banking and in some other expertise, but ultimately it's our core product set.
How will this help kickstart Fiserv's expansion into other sectors?
Well, I think in fact it is an opportunity to show how we sit at the intersection of banking and merchant. We are the only property that can sit at that intersection, that we could deliver payment processing, Clover, to a bank.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Ally, which is set to ring the opening bell, you can see the signage behind me, bases its business primarily in the United States, but the digital banking ecosystem is really expanding around the world. Our Judy Shaw recently sat down with the co-founder and group president of Philippines-based Maya Bank to learn more about the company's biggest goals.
Shailesh, it is wonderful to have you on Floor Talk today. Thanks for joining me.
Thank you. Thanks for having me here today, Judy.
My pleasure. So now I want to start off by talking about the company. Tell me about your vision at Maya and how you're achieving it.
So we started off as a payment provider for both consumers and for corporates to accept digital payments. And the idea really was to drive financial inclusion by helping people to pay and accept payments digitally. But very soon we realized that we need to go much deeper than that, because that's like financial inclusion, but at a very superficial level. Because in the Philippines, you'll be surprised that less than 50% of the people, adults, have a basic bank account. And access to credit to grow your business or to be able to do things individually is extremely constrained. So we decided that we're going to become a digital bank and put that at the heart of our payments business. So what we want to be, our vision really is to be the preferred digital bank for all Filipinos, whether it's an individual consumer or whether it's a micro or a small enterprise. And that's the journey we started off on. We got the license in 21. Within 6 months, we launched the digital bank. And since 22 onwards, we've been growing that. I'm really pleased with the way consumers have responded. We have over nearly 4.5 million consumers who have opened a saving account. A lot of them first-time ever bank account. 1.5 million people who have taken a loan from us. More than 50% of them for the first time ever borrowing from a formal financial institution, so building the credit footprint. And similarly, on the small and micro enterprise side of the house, we started providing them with business deposits, with access to short-term working capital, so to really help propel these very important vectors in the economy by providing something that's intuitive, that's something they can relate to, be very comfortable in accessing, and really start thriving and building out their own financial footprint and well-being.
And what would you say sets Maya apart from other fintech players in the region?
I would say, first of all, is a really deep understanding of the customer, whether the customer is an individual consumer or a micro or small enterprise, and using that deep understanding into creating a technology architecture that can then serve our set of customers. And to give you an example, like I said, over here we're talking about people who have never banked with a formal financial institution, who've never taken a loan. And these are people who are going to start the journey with very small micro amounts. And to give you an example, 1 peso, which is 2 cents. So our architecture is designed that you can open a bank account with as little as 2 cents with no minimum fees. And the technology is designed such that we want to make even that 1 peso transaction at least break even, if not marginally positive, profitable for ourselves. So the whole technology design that has been done by us is to support really small micro transactions and high velocity transactions. The second is the user interface is designed in such a way that it is absolutely intuitive for someone who's for the first time interacting with a financial service institution, should feel that they are welcome, that it is something that they're extremely comfortable. So it's really easy to KYC yourself digitally in literally seconds and open your bank account, for example. And the same thing holds for micro and small enterprises. They want to set up payments, they can do that really quickly through a portal. They're able to see the transactions, they can see the business deposit, get access to working capital. So I would say it's the deep insight of customers along with the technology capability. And the last leg is data. We, from the very start, knew that in the Philippines, the access to formal data, and here there's too much data. In the Philippines, the other way, there's very little data. And the data is in micro bits, it's fractured, it's fragmented. So how do you put it together so that I can get a better customer view and translate that into credit models, into fraud models? So setting up our data models and analytics capability using AI and others is something that we have done, which I believe is fairly unique, and I think sets us up for playing in the emerging markets in a big way.
Now, Maya has been instrumental in promoting financial inclusion in the Philippines. Right. What challenges have you faced in reaching the unbanked and underbanked, and how have you overcome them?
So first of all, we add another category to that, which we call unhappily banked. because even those who have a bank account, most of them are so poorly served that they're actually quite unhappily banked, because the access that they have is just a basic payroll account at times at best, really not much more service from the financial institutions. I think the first part that helped us was a very progressive regulator. The central bank, BSP, has been extremely progressive in the way they have thought through and helped and worked with digital players. So things like, the whole KYC process is completely digital. And, they've enabled that, they acknowledge that, and help to do that. So that helps us to onboard customers in a very fast, with large volumes. In fact, there are days when we have done like over 70,000 customers in one day onboarding themselves with Maya. The second part of it is creating licenses like the digital bank license. So we were one of the six banks, which was one of the six players which was given a digital bank license, after which the BSP put a 3-year moratorium. So creating a digital bank license and recognizing that the traditional banking industry can only go so far, or has gotten only so far, so they need an alternative model to get to the unbanked, underbanked, and also, like I said, the unhappily banked. So the regulatory environment is great. And then on top of that, we have used, like I said, our deep understanding of customers, which we had built out through our payment engines, and translating that into far deeper, wider set of financial services. So customers, instead of, for payments, you'll only put the amount that you want to use to make a payment. But the second we are a bank, they start saving. We help customers to grow their savings month on month. We give them small loans, and then as they build their credit history and the credibility, we give them larger and larger, for example, access to loans. So that has really helped us with our technology, with our insights, and like I mentioned, with our data capabilities in a regulatory environment that is very supportive to really help us drive that. So we're still at the early stages, I would say, of creating deep financial inclusion, but I think we're off to a good start.
All right, well, stay with us. We'll have more Opening Bell up next.
If I go back to 2021, it was really the first time in the company's history that we actually had an investor day where we showcased our first essentially 3-year strategy for the group. And it was very clear, very focused strategy. It was really about diversification, about the fact that we wanted to increase the franchise value of our reinsurance business, but we also wanted to get scale and expand on the insurance franchise. Once you have that roadmap and that vision, and you have excellent people, it's amazing what you can accomplish. And I look at where we are now, 5 years later, basically. The company has more than doubled in size. Our stock has gone up over 60% over that period of time, better than the S&P. Our book value per share, which is a critical measure in insurance, is also up over 60%. And we have improved pretty much every facet of the company, from underwriting discipline to operating discipline. But one of the most important things we have done is we have created a culture of inclusion and collaboration. That's frankly what allows us to accomplish what I just discussed. One of the great things about insurance is that we have jobs for everybody, regardless of where you come from. But no, I did not think that insurance was going to be where I ended up. Mm-hmm. I had gone to the Johns Hopkins School of Advanced International Studies for my master's. I have a master's in international economics. I speak 3 languages, and I had a lot of experience in Latin America. So I thought there's got to be a multinational company out there that could use somebody with my talents. But I didn't know what industry, and I didn't care what industry at the time, to be perfectly honest. So I had applied to different companies. And the way I ended up in insurance is my older brother, who had worked for McKinsey & Company for a long time, had said, listen, AIG likes people with your background. And for me, diversification is about a few things. It's about geography. It's about line of business, so property insurance, casualty insurance, aviation, different kinds of things. It's about insurance business and a reinsurance business.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Let's send things down to the floor where my colleague Trinity Chavez is awaiting the opening bell. Hi, Trinity.
Hey, Kristen, that's right. I mean, there's a lot of action happening here on the floor. Again, the team from Ally Universal is here just ringing the opening bell, getting ready to open up the U.S. equity markets. They're celebrating 10 years of being listed here at the New York Stock Exchange. 1919 is when the company was founded. So fast forward 105 years, the company now has over 11 million users around the world, total customers. But we have to go to the bell right now, so let's tune into that.
All right, we are officially open for trade. Ally celebrating the opening bell. They're, of course, a publicly traded company listed here at the stock exchange, a digital bank. And joining me now to talk more about the markets is Jason Rotman. He's a financial advisor at Elevate Financial Partners. Jason, great to see you this morning. Thanks for joining. And stocks opening with gains. What's your take on the state of the market?
Well, right now, the world loves to invest in the United States of America. I mean, there's so many things going on right now, whether it's France, whether it's South Korea, whether it's Europe, needing to cut rates to stimulate the economy. The place to be remains the United States, obviously, with Trump being elected. Wall Street likes Donald Trump's policies. They like Besant. All good things right now. So that's why we're seeing the S&P is above 6,000, not stopping. There's really no major imminent reason to pull back from this market right now.
Interesting, Jason. So let's talk about some of the things that you like. Obviously, you're noting here that investors do see the U.S. as a strong house when you look at the global picture, even though we know many market watchers have said for years that international stocks have been undervalued. Is it GDP? Is it earnings? What exactly do you like under the hood?
Great question. I mean, listen, the Trump aside, even, I mean, what the U.S. is producing is extremely unique. I mean, we have NVIDIA. We have the mecca of AI as a United States company. So when we look at what the world is desiring right now from a nuts and bolts element of the economy, it's actually coming from the United States. So politics aside, even, I think that is a huge driving force of the draw of the U.S. stock market. It just goes back to why the U.S. is so amazing in general. We are the hub of innovation of the world.
So, Jason, I do want to talk more about that because we know that as the U.S. stock market sits at or very near record highs for all of the major indexes, we did see political chaos unfold yesterday in South Korea. And of course, South Korea has been historically for decades a major ally of the United States. Explain what's happening there from a market perspective.
Well, listen, it's unfortunate, with the boots on the ground, so to speak, and the distress that's being put on the people there with the political uncertainty. But from a market standpoint, we are seeing a very muted response. The Kospi dropped a couple percent, it came back. The currency dropped a couple percent, it came back. We are not seeing any major market responses. Why? Because even the last time there was an impeachment 7 years ago, there was no major market turmoil, which is pretty interesting. I mean, the other reason is that we're not seeing a major market response in South Korea is that, for example, if you look at the iShares South Korea ETF, it's already down 14% this year. The Kospi already down 7%. South Korea has already been struggling with the potential recession and interest rate cuts. So, it's kind of been already priced in, Kristen.
Okay, so the question I think for U.S. investors, Jason, and our viewers would be, is there any potential knock-on impact here to the U.S. economy and thus the U.S. stock market?
From South Korea, no, because again, to my prior point, South Korea, I mean, listen, obviously it's not a rinky-dink economy, right? It's like the 7th largest economy in the world, 4th largest economy in Asia. But the reality is what's happening in the U.S. right now is very special. It's very unique relative to the global stage. We are producing what we need. So, look at Samsung. I mean, Samsung is negative this year. So from a U.S. investor standpoint, the safety remains in the U.S.
Interesting. I do want to talk about some of the stocks, Jason, on your radar. I know that you had mentioned Chevron as a stock that you're watching as the oil market is very much in focus. What are your thoughts on Chevron?
We got to take a look at Chevron, Kristen, okay? Chevron, I have many things to say about Chevron. First of all, you're getting paid to wait, okay? So every night you go to bed, you're still waking up richer, okay? You're getting paid 4% dividend every year just to wait, number one. Number two, Chevron, as huge and profitable as a company it is, it's been doing nothing for 2 years. It's been flat for 2 years. We're in a holding pattern of all major energy stocks. Again, as this new political administration takes hold, as we get potential inflationary pressures from Trump, as we have Berkshire Hathaway owning 25% of Occidental, right? They see value in the energy market during this holding pattern. Chevron has raised the dividend 36 years in a row. I think if you're a long-term investor, I think Chevron presents incredible value right now.
Jason Rotman, financial advisor at Elevate Financial Partners. Jason, thanks so much for checking in with us early this morning.
My pleasure. Take care.
All right, stay with us, everyone. We will have much more NYSE TV live after a short break.
You're here at the New York Stock Exchange for our annual Space Summit. This is your first year attending. Talk to me about why it was important for you to attend.
For decades, space was not really talked about, and particularly in the world of investing and early stage investing, it was not a smart investment to make. It was not, viewed as salient or viable given the long time horizons, the capital intensity, and that is all changing. So all of the work that the industry has been doing behind those closed doors, behind the curtain, is now coming to fruition. And so the best time to make these investments, especially in early stage, is just before something is about to happen and having that timing exactly right. And so that timing is now.
Talk to me about, from your standpoint, the criteria in which you consider before deciding who you want to invest in.
The fact of the matter is 776 is a generalist firm. And so this is not our deep area of expertise. We are an inch deep, a mile wide across different sectors, which is a beautiful position to be in, to really understand how all of these economies fit together. And for me, the interesting thing about space is that they're actually creating their own new economy. And so the in-space economy for me is wildly fascinating. And the opportunity, from an investment perspective is massive. And the opportunity and the capabilities that this is going to breed for us here on Earth, for humanity, the human side of this is absolutely fascinating for me. And so we typically make one moonshot investment per fund. And so we're relatively new to the space as investors, to the sector, I should say.
Yeah,
the sector of space, yes. and so I'm really here to learn. I'm here to understand what people are talking about, where the industry movers and shakers are. But the deeper I get into this, the more and more obsessed I've become.
And where would you say the different areas in space are you targeting right now?
There's a lot of...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the New York Stock Exchange. Well, earlier this morning, NYSE-listed digital finance company Ally rang the opening bell. And Ally, like many online banks, does tend to offer higher annual percentage yields, or APYs, for its savings accounts compared to brick-and-mortar banks. Well, the Fed's ongoing rate cut campaign could weigh on how much interest these savings accounts accrue. Currently, Ally is offering a 3.85% APY on all of its balanced tiers. Well, joining me now with more, Jennifer Streak. She's a senior personal finance reporter for Business Insider. Jennifer, thank you so much for joining. Of course, a great time of the year to talk about finances with the new year approaching. What do you find attractive about some of these online banks for consumers?
Well, I actually have my own online bank account, and I think that consumers will find them attractive because they do have higher interest rates. They're easier to secure. They have great online access, which means that you can access your account any time of day or night, move money, make deposits, withdrawals, if that's something that you need to do. So I think it's a very attractive time right now for consumers to look at online banking.
Mm-hmm. What does it mean that there may not be a brick and mortar presence? If they strictly have an online bank, what do our viewers need to know about that missing brick and mortar element?
Well, what's going to be missing is in-person customer service. You're not going to be able to go inside a bank if you have a problem. If there's a problem with a deposit, if you made a withdrawal or paid a bill online and you still haven't seen it post yet, you're not going to be able to go to the bank and sit down with a banker and have that problem resolved. It's all probably going to be online or at least over the phone.
Mm-hmm. Well, we talk so much about the Fed, Jennifer, and of course the jobs data that we'll get this week certainly will inform the Fed's next decision in mid-December. But as the Fed adjusts its rates, that does impact the rate that people can get on savings accounts and other products when it comes to digital banking. What might lower Fed rates mean for your personal investing strategy if you do have money parked at one of these digital banks?
Well, it certainly won't be a time to panic. It will be time to look at your allocations and make sure that you are putting your money in the best spaces, in the right vehicles for your savings and investing strategy. You may have to move some things around depending on what your monetary goals are.
Interesting. Of course, you mentioned diversification, allocation. Those are so important. So let's talk through some of the options. CDs, high yield savings accounts, money markets. How should our viewers navigate between these different allocation options?
Well, the way that I do it, my high yield savings account houses my emergency fund. And so an emergency fund, you have in case of emergencies, it's 3 to 6, 9, maybe even a year of expenses. My CD, I have that. That's more of a long-term saving strategy because when you have a certificate of deposit, you lock in that rate, but you also lock in your funds for a specific period of time. So once you invest in a CD, you can't just withdraw that money without significant penalty. Then there is a money market account, which will also give you a higher interest rate, and you will have greater and easier access to your funds. So depending on what your monetary goals are in terms of how long you want to save, that is going to dictate which one of those financial vehicles you employ.
Now, as we approach the end of the year, Jennifer, and a new administration is set to take office in January. What do you think are the financial do's and don'ts that people need to look at as January approaches?
Well, I think the first thing is that we have to look at allocation and diversification, which we discussed earlier. Don't just sit and do nothing. Really look and see how, if there are any new financial policies that are coming down the pike, how that is going to impact your savings and investing strategy. I would also advise to look at credit card debt if you are in any credit card debt and try to devise a plan to get out of that. I would also think about saving more money.
Interesting. Now, of course, we saw Americans spend a record amount of money online during Black Friday and Cyber Monday. What do they need to be aware of when it comes to navigating credit card balances and fees this holiday season?
Well, be aware that that bill is going to be coming in January. And so you should take stock of that now while you are spending for the holiday season. Pay attention to your interest rate. Pay attention to what points or miles or any sort of advantages that you are going to get perhaps with the credit card that you are using, and make sure that it is advantageous. Also, budget and pay attention to how you're spending your money this holiday season. The holiday season is a great time to sort of lose sight sometimes of our financial goals and strategies and really get caught up in the holiday season. So I would tell everyone sort of easy does it, and let's have an eye towards January.
Yeah, I'm really glad that you mentioned that, because especially for all of us who are, online on our digital phones all the time, we are just getting inundated with deals, and that FOMO element certainly can pop up. Jennifer, with stocks, the major indexes at record highs, you're talking about allocations. How should our viewers consider stocks as part of their allocations?
I think that with any investing in stock, you have to understand whether or not it's the right move for you. I always ask people that are interested in investing in the stock market, do you have everything else in place first? Do you have your emergency fund? Do you have a long-term savings strategy? Are you fully invested in your retirement accounts before you say, I'm going to invest in the stock market? And then when you do decide to invest in the stock market, what is your goal with that? Are you going to be more of a long-term investor, or is this a short-term invest? And can you afford to see the ups and downs that come with investing in the stock market?
Jennifer Streak, Senior Personal Finance Reporter for Business Insider. Jennifer, thank you.
Thank you.
All right, well, a big event is taking place at the stock exchange tomorrow. We will have those details up next.
So now, Chris, tell me about the MLS Innovation Lab program and what it means for Major League Soccer.
So we launched Innovation Lab last year because, MLS has always been at the very forefront of innovation. We were one of the first leagues in the world to launch automated review. We, have our global media partnership with Apple, but we never had a formal innovation program. And so we thought this would be a great opportunity for us to take all the energy from our league, our clubs, our youth leagues, and centralize it and build one central program that we call the Innovation Lab. We see hundreds and hundreds of companies apply every year, and we select the best 6 or 8 to work with us on a 9-month program where they get to really test and try out their technologies. We get to spend time with amazing young founders, and together we get to build the future of sport in North America.
Now, when it comes to evaluating companies to invite to participate in the program and for MLS to potentially invest in, what are you looking for?
Of course, it always starts with what's the idea? Does this founder have something we think is compelling that we can actually use in MLS or in one of our academies? And so that's the starting point. What's the technology? What's the product? And is it interesting to us? And then we do all of the normal things. We spend time with the founding team. We understand, what their vision is, who they are as people. Finances of the company, of course, matter. And then we evaluate all of that, and we go through a deep screening process, lots of cuts, and then come up with the final couple companies.
And tell me, what have been the biggest learnings so far from the MLS Innovation Lab? And personally, what have you enjoyed the most?
So the best is spending time with founders. I mean, you get to do it every day. The energy that startup founders bring is just incredible. Their ingenuity, their drive, their passion. I would highly recommend for any CEO, any executive, to go get out of your office and go spend time in the startup world and bring some of that energy back to your company.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio above the iconic trading floor, and we are opening at record highs for the major indexes, fractional gains across the board. You're taking a look there. The Dow up 0.6%, almost 300 points. This, of course, is on the back of positive results from an NYSE-listed company, Salesforce. It's focused on AI, beat expectations, and had better than expected guidance. That certainly is a lift in today's session. All right, well, we teased it before the break. We are getting into the holiday spirit here at the Stock Exchange. That tree looks very good. The 101st NYSE annual tree lighting is set to take place tomorrow afternoon, and you'll be able to catch all of the action right here on NYSE TV. We'll be live from 3 to 7 p.m. Eastern. Well, Trinity Chavez joins me now. And Trinity, I understand that you recently spoke to the CEO of one of the companies that is going to be on hand for this celebration tomorrow. Is that right?
That's right, Kristen. Brazilian Steakhouse, Fogo de Chão, boasts over 60 locations across 3 continents, and chances are there's one nearby. But they do tell me about how they managed to stay true to their roots in this interview and how they're expanding globally. So we took a closer look at their menu and the innovation behind it with the CEO on this episode of Taking Stock. Fogo de Chão is an iconic Brazilian steakhouse that has more than 90 locations worldwide and more than 70 here in the United States. We're speaking to the CEO about the biggest trends we're seeing in the food and beverage sector, menu innovation, and how they remain authentic while expanding globally, only on Taking Stock.
So we're not following a cuisine, we're actually really leverage the culinary art form of churrasco, which is very traditional Southern Brazilian cuisine. We've been doing it for 45 years. So you're right, we only have 72 restaurants in America, but 96 globally. But our whole essence of our brand is about scaling the authentic culinary art form that we know our guests love around the world.
When it comes to cuisine, there's many different trends out there, right? Especially as people are more health conscious these days. So how are you keeping up with these trends, but still being true to your brand?
What we love about it is everything we serve is nutrient dense and good for you. So it's up to you and your diet and how you like to dine, but we've done that for 45 years. What's exciting is our innovation around that is even getting better. We've just rolled out whole branzino seafood, so we're just now beginning the fresh seafood platform, and we're really excited about that.
Ooh, that sounds delicious.
Yeah,
we're going to have to try it when
We
you
will.
open up your new restaurant,
That's
just
right.
a block or two away?
That's right.
Yeah, talk to me about when that's going to be opening.
We're opening by probably like middle of December, but it's World Trade Center. Really excited. So it's our second one in Manhattan. We have one in Midtown. It's 18,000 square foot. The one in the World Trade Center is ground level. It will be about 5,000 square foot. So really excited to open that. Can't wait to host you there.
Now, you've experienced significant growth in recent years. We talked about over 90 restaurants worldwide, over 70 here in the United States. What would you attribute your success to, and how do you think you're going to continue this momentum?
We scale our culture first by really investing in our people. A lot of training, because this is an art form that is unique to us. We're the category leader in it, and we are scaling it globally. So when you think about how to do it well, to keep the authenticity, we focus on our human capital pipeline first. Now we have visibility of 3 years of sites ahead of us because we have 3 years of people, I would say talent ready to do it.
Now, with the holiday season just around the corner, how are you positioning yourself from a business standpoint, but also making sure your employees are prepared for the anticipated increase in revenue?
So we have large group sales managers that basically recruit and basically build that business for us. So on a business standpoint, with everybody coming back to the office, we're seeing that grow, but we're really excited about really the social side, which is relatively new for us.
Well, thank you so much, Barry, for joining me. It was a pleasure having you on
Trinity,
Taking Stock.
pleasure. Look forward to hosting you soon.
And again, Fogo de Show will be here at the NYSE for our 101st Christmas tree lighting, an incredible celebration that brings the iconic NYSE Christmas tree to life alongside live musical performances as well as exciting activations from some of your favorite companies. And joining me now to talk more about that is Delaney Hassan, NYSE Events Manager, and who has been an integral part of spearheading this event, making it all possible. Delaney, it's good to have you.
Thank you, Trinity. It's great to be here.
It's great to have you, as always, on the show. And, you know, you and your team have really been spearheading this whole event. And in fact, you know, we were talking yesterday, and it's taken you about a year to plan it. Talk to me about everything that went into planning and preparation just to make sure everything gets off the ground tomorrow.
Yeah, absolutely. Well, first I want to say it's a full building effort. Your team, my team, catering, facilities, everyone chips in. It takes about a year to plan the following tree lighting. So as soon as the tree is lit, the next day we have a meeting to discuss the following year. So yes, we get to enjoy it in the moment, but it's just a continuous planning session, and it's so much fun, and we're already looking forward to next year, but let's get through tomorrow first.
Yes, and then we're going to have lots to celebrate at the end of the day, just to celebrate the success that I know it's going to be. But I do want to talk to you more about the activations. You have organized over 35 activations that are going to be set up here all around Experience Square on the corner of Wall and Broad Street in Lower Manhattan. Tell us more about these vendors.
Sure. So I would like to call out Dana Lang, who manages all of the activations themselves, and they are made up of our listed community as well as small businesses around the area, as well as private companies as well that would like to participate. Some that will be here tomorrow include Fogo de Chao. I know you spoke about them a little bit earlier. Of course, we'll have Coca-Cola, iconic brand. But the ones that I really had a hand in were the charitable ones this year. So we have Mess in a Bottle. It's a Black woman-owned small business based out of Baltimore and Brooklyn. And we're so excited to have her here tomorrow. She'll be giving away sweatshirts, t-shirts, I mean, anything, you name it, to anyone that comes by. And it's all about just female empowerment. So that's one of my favorite ones that's going to be here.
We love that at the Exchange, female empowerment. Is it true that more than 450 companies are participating in global giving?
Absolutely.
Yep. Tell us more about this and who are going to be participating.
Yeah, so the whole global giving aspect of this is why we do it. Of the listed community that will be here tomorrow, you know, we have Dunkin' Donuts, we have, and I'm naming all the ones that I love personally, so we have Mr. Peanut, whatever, you know. But all of the companies do make a pledge to give globally, charitably. Tomorrow we do have Rosie Perez as one of our official tree lighters and bell ringers. She's actively working with Heart 9/11, which is a charity that provides care and relief to anyone impacted by natural disasters. So that's another one of our global giving,
Another
part of it tomorrow. I'm losing my words right now.
No, that's okay. You know, where we all are going to be speechless tomorrow, as we spearhead the NYSE Christmas tree lighting, 101st Christmas tree lighting that we've had here at the Exchange. And so thank you so much to Delaney, you and your team, everyone around the Exchange who has been a part of this planning. Thank you.
Thank you so much, Trinity.
Now I do want to bring back in my colleague Kristen Scholler. She is in studio. Kristen, I mean, I don't know about you, but in that interview with Delaney, talking about who is going to be here, especially Dunkin' Donuts, Build-A-Bear, Coca-Cola, and just so many more vendors that are going to be set up out here. I'm just super excited to cover it. I know you're going to be covering it as well. Our colleague Judy Shaw, it's really a team effort, and we're going to be broadcasting it tomorrow on NYSE TV Live.
That's exactly right, Trinity. A lot of fun in store for sure between the activations, the performances, the actual tree itself. It looks gorgeous. Of course, for viewers in Lower Manhattan, you can walk by, you can see the tree now. We'll light it tomorrow in just about 36 hours. But Trinity, I did take a look at the weather forecast, and we're going to get snow tomorrow. So we are definitely going to be in the holiday spirit.
You know what? I will say I will take snow over rain. I just hope the winds aren't too bad.
Yes, I know. Well, we can do it, that's for sure. If you're in Lower Manhattan, please stop by, whether you're a resident here or a tourist. It's always a great time of year, free hot chocolate among other exciting things, and you'll see that beautiful tree. And of course, for our viewers too, you can watch it on all of our platforms, NYSE TV, the app, and of course, tv.nysc.com. Trinity, we got to go warm up before this tree lighting tomorrow. For Trinity Chavez, myself, and the NYSE TV Live team, thank you for watching, and we'll see you early tomorrow morning.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.